I think we're going to get things going here. Welcome, everyone, to our webinar series about federal grants management. We're really glad you're here. My name is Emery Cowan. I work with the Fire Adapted Communities Learning Network and the Watershed Research and Training Center. And our organizations are really excited to be hosting this webinar and having the opportunity to bring on some awesome presenters from the team with Kelley Nonprofit Consulting. So I will let them introduce themselves and take it away in just a few minutes. But before we do, I wanted to provide some brief Zoom reminders and a couple other quick introductions, especially for folks who weren't able to make it to our last session. So we can go to the session overview. First of all, just to orient folks again, we are here in the second session of this 4-part series. These sessions do build upon one another, and so Kyle and Libby are going to be briefly referencing some of the content we covered in our first session, but if you couldn't make it or you would like a refresher on that session, that is available. Both slides and a recording are available on our website, and my colleague Emily is plugging links in the chat box for how to access those. We'll also be sending recordings to all of these webinars to anyone who registered, so you can look for that in your inbox as well. Next slide, please. Just a big welcome and thanks to those who have joined us today. And then we can move on to some Zoom reminders. So we do have the chat box open to everyone today, and we'd welcome folks to use that for a couple of interactive activities that we have planned for the session. Folks can also use the chat box to message panelists and hosts if you have any Zoom support needs or questions. And as we have been already, we're going to continue to use that chat box to share out resources throughout the presentation. Please, if you have questions for our presenters to address during the Q&A time, please use that Q&A box for those. We really don't want your questions to get buried in the chat box. We do have interpretation available today. So ASL, Susie and Damon are our ASL interpreters, and you can access that by clicking on the interpretation icon in your Zoom bar. And that's also where you can find closed captioning. And again, as a reminder, this webinar is being recorded and it will be shared widely. So moving on to a quick introduction of our organizations, the Watershed Research and Training Center is a nonprofit based in Trinity County, California. It does a whole host of land stewardship and rural community development and capacity building work, both locally and at a broader scale. And then FACNet is a partnership effort stewarded by the Watershed Center, and we work to connect people working on wildfire adaptation and resilience at a community with a community focus across the country. And we provide resources and an online community for our members, as well as a lot of different learning opportunities. So if you're interested in learning more, there's a link in the chat box to our website where you can check out our offerings, explore becoming a member, and sign up for our weekly blog. Next slide, thanks. So the support for this webinar comes from our organization's involvement in the Community Navigators initiative, and this is a Forest Service effort to connect communities to agency partnership and funding opportunities, especially those coming out of the Bipartisan Infrastructure Law and the Inflation Reduction Act. And then we also focus on the back end of helping communities implement and manage those awards through offerings like this one. We are one of 6 nonprofits working on this partnership, and so the others are listed here, and they all have amazing offerings as well. So I would encourage folks to check out their work. And just an overall disclaimer for our work through the Community Navigators initiative and our offerings. We are not speaking for or representing the Forest Service in this work, and so we're really providing this information as a starting point, but encourage people to reach out to your program manager, grants officer, and your actual award for specific applications and implications for your situation. Next slide. We have a bunch of trainings and resources that we're able to offer through thanks to support from the Community Navigators initiative. One training that's coming up that may be of interest to folks is related to community wildfire protection plans. We have a couple offerings upcoming related to those, with the first one being kind of crosswalking those plans with hazard mitigation and other local plans. So information about that upcoming offering is in the chat box. We also have a series about grants, agreements, and partnerships with the Forest Service that we offered this summer. And if that's of interest, recordings to those webinars and some other related materials are on our website. And last one I'll highlight is a primer and flow chart that we developed for the Community Wildfire Defense Grant, knowing that that is an open application period and something that we have a lot of experience with providing support on. And last, actually, final offering that I did want to mention from one of our Community Navigators Initiative partners, the Hispanic Access Foundation, is an upcoming webinar that they have around organizational stability and sustainability and diversification of funding. That's happening next week. So potentially something else of value to you all. So link for that is in the chat box. Last item for me is just to highlight that also as a part of our Community Navigators initiative, we provide technical one-on-one support for things like grant applications, reporting, navigating registration portals, etc. So accessing, that's another offering that we provide, and you can access it through our website using the Request a Navigator button on our website. So lots of offerings, hopefully, and a lot of great information provided by the Kelley Nonprofit team today. So with that, I'll hand it off to Libby and Kyle to take it away for today's presentation. Thanks, you two.
Thanks, Emery. Hi, everyone. This is the second session, so a lot of you are seeing us now for the second time, so I'll keep our introduction a little short and sweet today, but just a little bit of information about our team. We are located in the Pacific West. We work with dozens of organizations in a variety of capacities, so technical assistance support related to grants and many other services. We have about 25 full-time team members. We've been around for almost 20 years now, and we kind of following this slide, volume, variety, and viewpoint. So yeah, we work with a lot of nonprofits, we work with jurisdictions, we work with funders as well. Our team submits anywhere from 40 to 60 grants a month, ranging from foundation to city, state, and federal awards. We have, over 500 awards that we are helping to manage and counting. And we work with the full spectrum of missions, from financial education to the arts, disaster recovery, and much more. And as I mentioned, we also work with funders, and so we're able to kind of provide that viewpoint from both sides of the fence, which is really helpful. About half of our team is located in rural communities across the Pacific West and beyond. And we are proud to offer a lot of our services in Spanish as well. So it's great to be here for session number 2. And my role on our team is Chief Operating Officer. What that means is my perspective is more from the grants writing, communication, and compliance side. And I have Kyle on our team here too, and he'll introduce himself in a moment. But And I do just adding to what Emery shared as a reminder that, we are not federal employees. This webinar is informational, and always, for specific scenarios, check with your, grants officer, program manager, whoever you're working with at the federal level. For very specific situations, they'll have the final kind of advice or guidance that it will be most accurate. And just a quick note as well about changes at the federal level. We are following them closely and will update in future sessions as much as we can things that are happening that are affecting grants compliance and management. But just keep in mind that staying apprised of changes at the federal level, particularly that could impact your grants that either you have now or that you may apply for. I really recommend that. Whitehouse.gov has a lot of has those updates, specifically. There are also a lot of groups. For example, if your state has a nonprofit association, a lot of nonprofit associations are helping to follow those and send out updates that may impact nonprofits. So those are a couple of good sources of information to kind of look to help follow these updates. And then I'm going to pass it to Kyle to give a refresher from last session.
Yeah, thanks, Libby. Hi, everybody. My name is Kyle Stokely, and I am the Director of Nonprofit Financial Services here at Kelley Nonprofit Consulting. So if you remember from last time, we covered kind of the financial management basics, federal funding basics. And so we're just going to give a quick refresher here. So in that last session, we covered a lot of the uniform guidance and some of those updates that recently went into effect. So there were some increases in the de minimis rate and various thresholds. So it's worth looking into those if you're managing federal grants. We covered costs, so a lot of cost principles. So remember, costs have to be necessary and reasonable to be allocable to a federal award. We covered standard form 424A, which is kind of this high-level budget information broken into broad budgeting categories like personnel costs, supplies costs, and other costs. And then we covered grants and cooperative agreements a bit. So, those might entail different levels of involvement from the awarding agency, and certain agencies might use different terminology depending on the type of award. And so it's worth looking into that. And there's also this resource from the Watershed Center called Forest Service Grants and Agreements 101 if you want to learn more about forest service funding opportunities. Next slide, please. Okay, so we're going to kind of start off with a little question. What's the difference between direct and indirect costs? So feel free to write this down on a piece of paper, or you can drop your answer in the chat box. We'll give you 30 seconds to plug some ideas in. So it's worth remembering, to keep the distinction between direct and indirect costs at the forefront when you're budgeting for federal grants. And let me see if there's any activity in the chat. I haven't seen any answers come through yet, but we do have a lot of content to cover. And so if we could advance to the next slide, we will go over the difference. So direct costs, remember, these are costs that are specifically attributable to grant-related activities. And then, yes, so I see from Lee, indirect is supporting costs. So yeah, these are overhead costs essentially. So these are necessary to the ongoing operations of an organization, but they're not necessarily allocable to specific federal awards, right? And so they're supporting the organization overall, which supports each of these individual programs, but they are indirect in nature. Okay. Let's go to the next one. So we have a bit of a warning here. So basically, this presentation is going to be a little bit more dense and technical than session one. And so just issuing a disclaimer from the get-go, just to kind of prep yourself for the dense content in this. Yeah, just putting that out there before we really jump into things. Okay, so today we are going to cover an overview of financial management systems. We're going to go over budgeting and financial planning. We're going to talk about tracking and documenting expenses for federal grants compliance. And then we're also going to go over briefly some final reporting requirements from the uniform guidance. Okay, so if anybody knows what a financial management system is, or maybe some examples of what it includes, feel free to drop that into the chat box. We're going to start off with a question here. Give you a few more seconds here. Okay, so financial management system basically is, yeah, so one example is, yeah, QuickBooks Online for nonprofits. Yeah, absolutely. So it's the platforms and processes that ensure the proper handling, tracking, and disbursement of federal funds. So it can include accounting software, yeah, like QuickBooks Online or Xero, or there's tons out there. There's cloud databases, right? So we can use Google Drive or OneDrive. There's like donor management platforms or customer relationship management platforms. And then there's also expense management apps. So this isn't the entirety of what a financial management system could be comprised of, but those are just some examples of various components. So the requirements per the Code of Federal Regulations, in general, the financial management system has to be able to identify all federal awards received. You're going to have to be able to organize grant applications and award letters and other information along with the source documentation. So that needs to be organized in kind of a neat and tidy way. You have to be able to demonstrate control over not only the funds that you're managing, but also the property that you've acquired as a result of the federal award. And then you have to also be able to compare budgeted to actual expenditures, as well as have some policies and procedures in place that your team abides by when managing federal grants. And we did want to highlight there is one policy that's kind of forgotten, and it's in the Code of Federal Regulations, and it basically just describes how your organization needs, or how non-federal entities need to handle advance funds received from the federal government. And so basically, if you're receiving, I believe the threshold is $250,000. If you're receiving an advance more than $250,000, the federal government expects you to store that in a reasonably interest-bearing account. And there's some other bits and pieces in there, like if you earn interest up to $500, you can use that for general administrative costs. But anything over and above $500 needs to be remitted back to the federal government. And so if you want to learn more about that, there's a little link there to that specific portion of the code. So that's just something to keep in mind if you're receiving advanced federal funding. Okay, now we're going to get into some budgeting and financial planning. So some techniques for budgeting. Generally, we would start with kind of prior period financial results, right? So we would be using those to project current or even future year income and expenses. Another technique is we can annualize costs by program or project. And so let's just say we're at the end of quarter 1 and we have total expenses of $100,000 for this program. We can extrapolate, right? And we can say, okay, we've spent $100,000 in Q1. For the year, we multiply by 4 and say, yeah, roughly $400,000 in expected expenditures for this particular program. Another good technique is to refer to prior grant award applications. And so you're going to compare anticipated versus actual costs, or budgeted versus actual costs. And you can see kind of where you fell, right? If you were severely under budget or over budget, and which line items need to be adjusted for potentially for future budget applications or for future applications. And it's a really good idea also to enter your budget into the accounting system that you use, which allows you to not only abide by the Code of Federal Regulations, the guidance of needing to track budgeted versus actual expenditures, but also for financial reporting purposes, right? So you can submit that budget versus actuals to the board on a regular basis so that you can help improve their financial oversight. Okay, more best practices for budgeting. So one big thing is to seek input from all of your major departments. So let's just say you have multiple programs. Getting input from that program manager or director is very important because oftentimes they're more intimately familiar with the ongoing costs necessary to run the program than let's just say, the general finance manager of the organization, right? So getting feedback from them is very important. Also, ensuring that your income and expense lines are adequately disaggregated. So what that means is rather than saying, hey, we expect $5 million in government grants this year, it's a good idea to list out each of the grants that you anticipate and then adding those up and seeing what it totals versus giving a ballpark figure based on, I don't know, some prior year financials or just a gut feeling you have, right? So disaggregating those income and expense lines is important. And then also supplemental budgets. So those might be needed. Let's just say you're, I don't know, a chamber of commerce and you're receiving tax revenues and you have a budget for how you're going to spend those tax revenues, but you need to make some changes. It's important that you get the necessary approvals and submit supplemental budgets, let's say to the county, right, before implementing that new revised budget. And then also, it's important for program budgets to include allocable portions of salaries, fringe benefits, and overhead, right? Because the cost of a program isn't just the direct cost, right? It's not just the supplies that you're purchasing, right? It's also the overhead associated with, facilitating that program's activities. And then it's important to start small. So you're going to, as I said, adding up individual grants that you expect to receive or, adding up any equipment purchases you anticipate in the next year versus trying to come up with some arbitrary ballpark figure that might not actually be veridical, right? Might not map onto reality well. Okay, so what are some questions that you should be asking before you dive into a federal grant application? Let's see if we can drop some answers in the chat real quick. Okay, so next slide, please. Yeah, so there's kind of a lot of questions we can be asking, right? So this project that we're applying for funding for, is it aligned with our mission and goals, right? So is the project going to correspond to some existing program within the organization, right? It's important. We're not, are we ready to create a whole new program in order to align with this federal grants mission, right? Or are we going to maybe pass on that one because it doesn't align well? Or are we equipped to even carry out a federally funded program, right? So do our programs have enough capacity to undertake this project? Do we have the capacity from a finance and accounting standpoint, right? Do we have the resources necessary to track income and expenses associated with this grant? Do we have an adequate financial management system to handle the funds? Will the indirect portion of the grant be enough to cover our overhead expenses, right? So if we're only receiving the de minimis in indirect, but our indirect costs are much greater than 15%, let's say, do we have unrestricted sources of income that can help cover the gap, right? That's an important piece to get straight before you apply for federal funding. Also, do you have a firm understanding of the requirements in the notice of funding opportunity? Are there comparable funding opportunities that are maybe non-federal that have less stringent compliance requirements, right? So that's another important piece. If you can find funding from non-federal sources, oftentimes they don't have as strict of compliance requirements as federal grants do. Okay, so for a lot of this presentation, we're going to be going over we're kind of the practical application of some of these principles, and so we're going to use terminology shown here. So we're going to use classes, which is basically just a tracking mechanism to track direct and indirect costs. And then if you are a 501c3, you can also use that to track functional expense designations. And so functional expenses, this is for when you're filling out your 990, you have to fill out your statement of functional expenses, and it breaks your costs down into three categories: program, management in general, and fundraising. And so we are using classes to track both direct and indirect costs for federal funding, as well as functional expense allocations for our 990. If you're not a 501c3, that doesn't apply. So you're just going to be using classes to track direct and indirect costs. Okay, and then there's customers. So these can be seen as donors or funding agencies. And then underneath customers is projects. We're going to do a little demonstration, so this will become clearer in a minute. But projects are basically, you can see those as restricted grants, right? So a federally funded project that is assigned to a particular funder or a particular customer. So you can use one or all of these tracking categories within your accounting system to make things a little bit easier to keep track of. Okay, so it's important to leverage these tracking options to code expenses on a regular basis. So ideally, you're running reports monthly, right? And so what you can do, you're coding expenses that come through your bank feed, let's say. And at the end of every month, you're running a statement of activity by class, right? And so if we can see, there are the three columns here are direct program, indirect management in general, and indirect fundraising. And so we've coded various expenses to those three buckets. But you can see toward the right of that statement of activity down here that there is a not specified column. And I think this is really helpful for every organization. You know, every expense should be in one of those buckets, direct or indirect buckets. The not specified column is those expenses that you've missed, that you haven't coded. And so this is a good way to check to see that you've coded every expense incurred in the month into its respective category. And then if you'll notice, we're only using these classes to track expenses, right? We're not using them to track income. The income is tracked using projects. And so the income in this statement of activity is going to all be in the not specified column because we're not applying the classes to income, only expenses. Okay, next slide, please. So running a statement of activity by project now. So we ran one by class, right? And that's to see if our expenses are categorized in the correct bucket, direct or indirect. And then we can run that same report, but we can show it by project or customer, right? And so each of these columns represents a specific project. So we have grant A, grant B, and grant C. We also have not specified. And you can view the not specified column as kind of the unrestricted funding. So we haven't assigned a project to it because this is money that can be used on whatever. And we also have various expenses that can be seen as drawing down from the not specified or the unrestricted funds, right? But in those first three columns, we're looking at, we brought in $75,000 for grant A in this month, and we've spent $62,000 of that for the month. And so we can kind of see the net remaining on a monthly basis if we run our statement of activity like this. Okay. More tips. So it's important, as I said, make use of the accounting software's both financial reporting and budgeting capabilities so that you can keep track of expenses for each grant and monitor budgeted versus actual expenditures. And ideally, you're doing that on a monthly basis. And then there's also the use of external spreadsheets. Like these can be very helpful when you're when the reporting requirements from the funding agency don't necessarily align with the basis of accounting that your organization uses. I'm going to talk more about that in just a second. If we can go to the next slide, please. So when would a grant expense report not match expenses that are shown in your organization statement of activity or in your accounting software? So we're getting a little bit technical here, but essentially what we want to know is, why is there a mismatch between the expenses that are listed out in our grant report and the expenses that are listed out in our accrual-based accounting system? So maybe think on that for a second. I'm going to get a sip of water. Maybe drop some answers in the chat if you could. Okay. Let's see. So when would it not align? When would the two not align? Because potentially capital expenditures have been made with grant funding. So basically, when cash is used to purchase an asset, so property, plant, or equipment, the costs associated with that purchase are going to be spread across multiple years in the form of depreciation. Okay, land is not depreciated, but let's just say you purchased a building for $1 million cash in January, right? So from the federal agency standpoint, you've spent that $1 million that you had that you received from them on the building. And so you can report, hey, look, we've dispersed this $1 million in cash that we got. But in your accounting system, that's going to be booked actually as a property, plant, and equipment. It's going to be booked as a fixed asset. And that building has a useful life. I think the IRS guidelines say 39 years. And so you're going to be recognizing that $1 million cost over the span of 39 years, right? And so that's why sometimes there can be a mismatch between the report that you send to the funder and what's actually showing up as a cost in your accounting system. And then it's worth noting here, so we're talking about capital expenditures, non-capitalized costs. These are just like run-of-the-mill expenses that are recognized when they're incurred, right? So if you're purchasing supplies, if you're paying wages for your staff, if you're paying for utilities, these are non-capitalized costs. Okay, so what's a good workaround to ensure that these costs under a grant are going to be captured and accounted for? So this is getting very technical here. There are basically two workarounds for ensuring that all the costs are captured and accounted for, from both your standpoint and from the funder standpoint. So if we can go to the next slide here. There's two options. One is using an external spreadsheet. Okay, so what we're doing in our accounting system, it's an accrual basis system, right? And so we have the non-capitalized costs are going to be shown in our statement of activity. And then we have a separate spreadsheet that lists out all of the capital expenditures under a grant. What we can do is we can kind of shift some of that data from the accounting software and combine it with capitalized cost in the spreadsheet, right? And so that's one way to show all of the costs incurred and not just the non-capitalized costs incurred under a grant agreement. But then there's kind of this more advanced option, and I can show this in just a second when we do our demonstration. But what it entails is we're creating this fake expense account within your accounting system, and you're going to make hopefully, you have a bookkeeper or a finance manager that's going to make a journal entry that'll essentially create this fake expense of, let's just say you purchased equipment, right? We can go and debit and credit that expense account the same amount so that it doesn't impact your overall organization's net income. But it is going to show up because of how you're coding it in your in your accounting software. It's going to show up under your federal grant statement of activity. Okay, so basically what we're doing on the debit line, we're giving it a grant designation, but on the credit line, we are not. And that's so that it shows up in the federal grant report, but not in the overall organization's report, right? So we're adding $25,000 in this example down here, but we're also subtracting $25,000, which nets to zero in the aggregate. Okay, so if we can stop sharing for a second and go shift over to a little demonstration. So, quick disclaimer. So, I'm not affiliated with QuickBooks Online. I'm not endorsing it, but I am using it just as a demonstration. And I think it's very helpful to kind of see the practical application of some of these principles that we're talking about, rather than having it all in this theoretical realm. So let me share my screen. Okay. Alrighty, so we've got QuickBooks Online here, and we've got a sample organization. And so what we're going to do is we're going to pretend like we have a federal grant that we need to manage. And what we're going to do is use the projects module within QuickBooks. So I'm going to navigate to projects. And what I've done is I've created a new project for this example grant, federal grant A. And I've plugged in a lot of the information that is needed so that I'm in compliance with the uniform guidance, right? So the funder is going to be Federal Funder 1. The project or the grant is Federal Grant A. I have the start and end dates here. And then I also can use this notes section to give the grant listing number, the funding agency, and so on and so forth. So any additional information you want to add there can be very helpful to you. And we can see that it's in progress. We can change the status if it's closed out, right? So this is a great way to kind of visualize what's going on with the grant and the timeline. You can also use the attachment section to drop any grant agreements or subawards. So this is a great spot to put that information and documentation in. So let's just say I need to track income and expenses for this grant. What am I going to do? So we're going to go into this bank feed, and let's just say we have, we've got $200 that came in from this funder, let's say. So we're going to code this to the project so that it shows up as $200 in income. And let's just say the income is government grants. And I'm not going to assign a class because this is income. We only use classes, which are going to be these direct and indirect categories to track expenses. And so I'm going to add that. And if we go back to projects, we can see, yay, the income shows up now, right? So we see that we got the $200, and I can click in for more detail. Let's just say I'm going to record an expense now. Let's say this $800 was supplies. It's a direct program cost. And I'm going to assign this the Federal Grant A project so that it shows up within the project module. And so I'm going to save this one. And what that's going to do is now it shows up as an $800 expense under this project. Now, let's just say I also purchase a fixed asset. So let's say for $1,200, I bought a truck. And now essentially what's going to happen is even if I assign this project to this fixed asset purchase, when I go into the project, it's not going to show up as a cost. And that's because what I've done is I've capitalized the cost, right? Now it's showing up as an asset instead of being recorded as an expense. And so one way to get around that is this journal entry that I was talking about. So essentially what we're going to do is create this dummy expense account. It's a fake expense account. And let's say we call it capital expenditures under Federal Grant A, right? So it's very clear that this is not a real expense account. And so this was $1,200. And I need to show that I spent that money in the month of January. And I can put whatever description I want, but I'm going to put the this grant designation only under the debit line. And I can put a class if I want, but really it's not going to matter in the aggregate. But we've debited this account and credited the account the same amount. And basically what this does is when I go to save it, it'll show up in my project now, right, as a $1,200 capital expenditure, right? And we have the supplies there as well. And so we can see all the disbursements. And so basically what this does is now QuickBooks and the federal grant report will align. Now, when we go into reports, and I go and run a profit and loss for the month, what we'll see is this capital expenditures expense nets to zero because I debited and credited it the same amount. And so it's not affecting my overall organization's net income for the period, but it is right because we're adding 1,200 and we're subtracting 1,200, but it is going to show up on my project report, which I think is kind of a nifty workaround, right? We don't have to do that if it's too complicated or it makes things too messy. You can always use an external spreadsheet. But I just think this is a great way, great workaround for those that are struggling to reconcile the federal grant report with your accounting systems reports. Okay. We can also go into budgets, but basically, you would leverage the budgeting option within your accounting software so that you can run a budget to actuals on a monthly basis. Okay, I'm going to stop sharing now. And Kelley, if we can pull the presentation back up. Okay, jumping into documentation. So basically, all invoices, all receipts pertaining to allowable costs should be documented for a federal grant. So not only should the documentation be there, but also the proof of approval should be included in there, which helps to demonstrate proper authorization and kind of reflects well on your organization. If you're undergoing a single audit, you want to show that you have a strong system of internal controls. So basically, the program manager, we have proof that the program manager approved the program officer's expense and checked beforehand that it was allowable under the federal grant budget, right? And so having not only proof of purchase to substantiate that you spent money on what you said you did, but also proof of authorization, right? That you have that system of internal controls that the auditor will like to see. And what that does is it basically just reduces the risk of question costs coming up in an audit or other audit findings. So, but again, certain federal awards, they might have different levels of documentation requirements or different types of documentation needed. And so I think it's important that you understand the reporting and the documentation requirements at the onset of your award. So before you've started actually spending for the awards, so that you know what you need to collect to document everything properly. Okay, next slide, please. So continuing on with documentation. So as I demonstrated, using the documentation functionality as much as possible within the accounting software, that'll help to you'll be able to retrieve receipts or award letters or other supporting files more easily that way, and it's kind of housed in one place. But in addition to that, you should have this secondary documentation system, which can be on a flash drive, or it can be in a cloud-based platform like Google Drive or OneDrive, which will allow you to have a backup essentially, right? So we have everything in one place, and that's in our accounting system, but we have maybe Google Drive with some folders that kind of that can collate all of the documentation pertaining to this federal award in case the accounting system glitches, and vice versa, right? But it's important that you're checking the access permissions on the storage system that you're using, right? So that unauthorized users can't access sensitive documents that should be kept confidential, let's say. And then also timesheets. So it's important for your employees to be, or anybody working on a federal award to be tracking their time, right? And so that you can have proof when you go and allocate a portion of salaries and fringe benefits and taxes and all of that, when you're allocating that to a federal grant, you can see that you've apportioned it according to the amount of time that the individual has spent on the federal grant activities, right? And so when you're attaching these signed timesheets, right, to a journal entry where you're doing the allocations or to paychecks within your accounting software, the auditor can go in and see that and pull the documentation without having to ask you, hey, can you go retrieve these signed timesheets? And I think that's just a great way to kind of speed up an audit. And then again, as I showed, grant award letters or sub-award contracts, those files can be dropped into the grant tracking module. So in case of QuickBooks, projects module, so that we can go and retrieve those easily if needed. And then as we did, the performance period for the grant should be displayed right in your accounting system so that you know when costs are allocable, right? So any cost falling outside of the performance period is generally not allowed unless you get prior approval from your federal awarding agency. Okay, let's see. Moving on to indirect costs. So I know in the last session, we briefly mentioned negotiated indirect cost rate agreements. These are basically, you're going to apply for one through your federal cognizant agency, which is going to be the agency that gives you the majority of your federal funding. And so basically when you're using your negotiated indirect rate to calculate the indirect costs that are allowable, you're going to take the direct costs and multiply them by the negotiated indirect rate versus using the de minimis as we discussed in the prior session. So it's important though, because when you're trying to determine what's allowable as far as indirect costs go, you're going to take your negotiated rate and you're going to multiply it by direct costs that are allowed under your negotiated agreement, right? And so sometimes your negotiated indirect rate will only be applicable to, let's say, personnel costs, right? And so you can apply it to direct supplies cost or other direct costs, right? Only the personnel costs. But a lot of times the negotiated indirect rate will be a lot higher than the de minimis, right? So sometimes I've seen rates as high as 40%, you know? So 40%, but that's only being multiplied by the applicable budget line items. So if you're uncertain about how to apply your negotiated rate, you can always reach out to your point of contact at the cognizant agency to get a refresher on which line items that rate applies to. And then sometimes you might hear this term fully loaded cost rate. So fully loaded cost rate, this is basically the direct and indirect costs that are associated with a federally funded project. And basically what it does is it captures the true cost of labor under a grant award. And so what it involves is we're taking direct and indirect costs and dividing by the total labor hours under a federal award to get this fully loaded cost rate. But if you don't really know how to determine what your fully loaded cost rate is, or if you don't know whether it's necessary, consult the notice of funding opportunity or the awarding agency for additional guidance there. So we're going to do a little bit of an example to make it more concrete. So let's just say we have this federal award and we've determined that our direct labor rate is $25. And we've also determined that it's going to take about 4,000 labor hours to complete this project. And we've also determined that total indirect costs associated with this project are going to be $50,000. So in that case, we have to first calculate what the overhead rate is. Overhead rate is going to be the total indirect costs divided by the total direct labor hours. And with that, we would get $12.50 an hour. And then in order to determine the fully loaded cost rate, we take the direct rate and add it to the overhead rate, right? So we would go $25 for the direct labor, $12.50 for indirect or overhead, and that would get us $37.50 per hour as the fully loaded cost rate. Okay, we're almost done. So match funding, I wanted to cover this because I think it's really important to understand what match funding is, and you hear this term a lot. So basically, this is going to be funding from non-federal sources that you can identify and that you can kind of ring fence for use on a federally supported project. And so in order to count as match funding, the funds need to be verifiable. So we need supporting documentation and accounting records to substantiate them. They need to be not included as match or as contributions on any other federal award, right? So your accounting software needs to be able to identify unique funds for matching purposes. And then also they need to be provided for in the approved grant budget for this federal award. Continuing on with match funding. So this term unrecovered indirect costs, I'm sure there's some of you who have encountered this term. So this is going to be the difference between the indirect amount that is actually charged under an agreement versus what could have been charged according to your organization's negotiated indirect cost rate agreement, right? And so sometimes they won't allow you to charge the full amount of your negotiated indirect cost rate. And those unrecovered indirect costs are going to be, in some cases, with prior approval from the awarding agency, they can be used for matching contribution purposes. And then there's also in-kind contributions that can sometimes be counted as match. And so there's certain in-kind contributions like professional services or donated goods that can be counted toward the matching requirements, but they're generally limited to the fair market value of the services and property at the time of the donation. So basically what that means is, if let's just say under at an organization, somebody donates a CD player, right? And they say, hey, the CD player is $10,000. It's worth $10,000. So now I'm going to go record $10,000 in-kind contributions. No, I have to only record what the fair market value of that CD player is, and it might be zero at this point, but right. So it's limited to the fair market value of the goods that you received or of the services that you received. But if you're unsure about whether a particular contribution can be counted as match or not, then just ask your point of contact at the federal awarding agency just to make sure. Okay, and now tracking matching funds in your accounting software. So we're using projects to track income and expenses, right? But I think a good way to kind of to segregate these funds and make sure that to identify them in our accounting software is to create some new income accounts. So we can have one called, grant revenue match, right? Or in-kind contributions match, right? And so those essentially what we've done is we've highlighted those, like, alarm bells should go off when you see that a certain contribution has been coded to that income account, because now we know it's being used as match for some federal award, right? And so you would code those matching funds to that income account, the matching income account, and then you would also code it to a project. And so when we run our statement of activity for that project or for that federal grant, we can see that it's matching contributions that count against this grant. There's other options too. In QuickBooks, they use locations or tags. Within your accounting software might be different, but these are just other tracking options that can help you identify matching funds. But sometimes the functionality of those tracking options is limited, and so just be aware it might be less straightforward than just having an income account that identifies funds as match funding. Okay. So we wanted to give you kind of an example of how match funding is calculated. So what the match requirements would be under a federal award. So let's just say you get awarded $250,000 and the federal award requires a 75-25 match. So what this means is the awarding agency is going to provide 75% of the total project cost, but the remaining 25% has to come from other funding sources, right? And so we have the award amount of $250,000. We have to calculate the total project cost. So we would take $250,000, we would divide it by the matching portion that the agency is providing. So divided by 0.75 or 75%, we would get a total project cost of $333,000. And now we know that the total project cost minus the federal award amount is going to equal how much we need to come up with as an organization in match funding, right? And so that would come to about $83,000. And so we have 75% coming from the federal agency, and we have 25% needing to come from the recipient of the federal award. But if you'd like more information about match funding, there's a great Community Navigators match resource at the bottom of this slide. It's a great place to start. I think it does a great job of breaking it down more thoroughly and in a very comprehensible manner. So that's a great resource. And finally, final reporting requirements. So this is going to be Section 200, Clause 344 of the Code of Federal Regulations. This is closeout, and it applies to lead applicants and other pass-through entities that are administering a federal award. And so basically, any of the financial or performance reports under this award, they have to be submitted to the awarding agency within 120 days of the end of the performance period. It can be submitted earlier, but that's the limit there. And then subrecipients. So if you've received the subaward, you have to submit reports within 90 days to the pass-through entity. And so what that does is it gives the pass-through entity or the lead applicant a little, grace period of at least 30 days to compile all of the reports and get those sent off to the awarding agency. But it's worth noting that any unused funds that have not been obligated to be spent should be returned to the federal awarding agency kind of as soon as possible. Libby, do you have anything to add about final reporting requirements?
I think the tip is really key here. So making sure to consult with have a close relationship with your grant manager, that you're comfortable asking them questions about the final reporting requirements and timelines. Sometimes there are cases where they may offer extensions, and so making sure you know if that option exists and how to take advantage of that if you would like to. Meeting all of the deadlines. So even if there might be some flexibility, maybe flexibility is the wrong word, but they may accept a late, final report. But just remembering that with federal dollars, they are, tracking things like that, and it kind of goes on your internal, like it's a known thing that you have submitted that as a late report. So deadlines are really key. Communication with your grant manager is really important, and preparing well before the deadline. So making sure that all of your ducks are in a row, just as Kyle was talking about this whole presentation, making sure you have everything in place well beforehand so that when your reporting deadlines come, whether it's throughout your grant award or at the very end, that you aren't scrambling the day before it's due to gather all the information you need, because that's, of course, very, very stressful. And then, some things may be missed. So really stressing preparation and documentation to help you with your final reporting and just general reporting are my tips for this.
Thank you, Libby. Okay, so that about wraps it up. We're going to end with a little quiz for everybody. So this is going to be a Zoom poll, and if you could just answer some of the questions, or answer all the questions, hopefully, to the best of your ability, that would be great, and we can kind of go over the answers once everybody has finished.
Okay, that should be launched, Kyle.
Thank you, Emery. Yeah, so we'll give you all a few minutes, and then we will go over the answers. All right. If we could maybe start to wrap things up, another 30 seconds or so. Okay, let's go over these answers. So, starting with, oh, perfect. Okay, so number one, an entity's financial management system need not be able to compare budgeted to actual expenditures for a federal grant. Majority of people got this right. That is false, right? We specifically mentioned the financial management system needs to be able to compare budget to actuals for a federal grant. Number two, it's important to determine whether a federally funded project aligns with an organization's mission and goals before starting a grant application. Yes, almost everyone got that one right. That is true. You should determine whether it aligns with your mission before starting grant application. It's one of the questions that you should be asking. Which of the following financial statements displays an organization's income and expenses for a particular period? So we had statement of functional expenses, which I mentioned. This is actually for the 990, right? It only lists out the expenses, so it's not going to show the income portion. What's going to show income and expenses is actually the final option, which is the statement of activity. And so this is also known as the income statement or the profit and loss or P&L if you're in for-profit. One reason why an organization's books and grant reporting might not align is because many organizations rely on the what basis of accounting. So this one was a little tricky. A lot of organizations will rely on the accrual basis of accounting, and that's why when you're reporting out to a funder, and that report includes capital expenditures, there might be a bit of a mismatch because you're capitalizing those costs versus recording them as expenses when you pay for them. Okay. The contract between a federal cognizant agency and a non-federal entity to charge an indirect rate greater than the de minimis is called this is negotiated indirect cost rate agreement. Sometimes it's abbreviated NICRA, but yes, it is a negotiated indirect cost rate agreement. Okay, calculating a fully loaded cost rate involves determining both direct and indirect costs associated with labor devoted to a federally funded project. So this is true. So it does involve determining both direct and indirect costs associated with the project. And then I'm glad to see that a vast majority of people got this right. A single contribution can be counted as match funding for more than one federal award. That is false. Can only be used once. You cannot double dip. Okay, brilliant job, everybody. That about wraps up the content. Okay, what is next? Can we advance to the next slide, please? Perfect. Okay, I will hand it over to Libby now.
Thanks, Kyle. Thank you, everyone, for sticking with us. We are going to get into the Q&A session after this. But just a quick note that there will be limited one-on-one sessions available. These are 1 hour long. If anyone is interested, you can complete the intake form, which is going to be over in the chat. And it's also going to be sent over email after this session. Watershed will be selecting the groups chosen for the one-on-ones within the next couple of months. And yeah, we look forward to connecting on a one-on-one basis with some of you and learning more about what questions you have. So moving to the Q&A. The first question, what happens when Google Drive glitches? My organization has actually moved our supporting expense docs for federal agreements from Google Drive folders to a desktop hard drive. So no matter what system you're using, whether it's, like OneDrive or Google Drive or like Microsoft SharePoint, I always recommend having an external hard drive where you store, your data that you have to keep a record of. So you can use, whatever system makes sense and fits with your email system and your other softwares that you're using. But I do always recommend backing it up at least to one spot, potentially to two. And then the next question, very small nonprofit with no paid staff, reporting to IRS using cash accounting. Any advice? Hiring staff is not going to happen. Kyle, do you have any advice for groups in that situation?
Yeah, I mean, it's more common than you would think. If your organization is using the cash basis of accounting, um, I- in so in general, I mean, if you're a for-profit business and you're using the cash basis of accounting, you're still going to be booking fixed assets as assets, right? And so those still won't show up on a statement of activity or a P&L for the period. And so you still might need to do some of the modifications that we showed in the presentation. Either you need to have an external spreadsheet to track those capital expenditures, or you need to do the tricky journal entry, right? That's kind of booking it to a dummy expense account in order to show that expense or the capital expenditure on a statement of activity produced by the accounting software. So that's not uncommon, but it still might be the case that you're going to be capitalizing that particular cost. If you're not capitalizing the cost, then the reports should align actually, right? Because you're just showing the movement of cash, right? That's basically what your statement of activity is showing: cash that you received, cash that went out, and that should align basically perfectly with what you're submitting to the funder. There is also, you still might have to do journal entries for grant allocations, right? So you might have to allocate a portion of a staff's paycheck to various federal grants, and so you're still maybe going to have to be doing some of those journal entries, even though you're on a cash basis of accounting, because we need that to show up on our statement of activity by project, let's say.
And another tip, just from an administrative perspective, if the bookkeeping and financial management piece is something that is new to you or challenging, it may be worthwhile to consider, reaching out to a bookkeeping firm that has the experience you need. If that's within your budget, depending on your geographic location, cost for that can really vary, and it just depends on a lot of factors. But seeking, even if it's temporary, some additional support to, help get you on the right path to, tracking your income and expenses in a way that will allow you to report to the IRS, report on your grants, definitely worth exploring. All right. Do you have an accounting software recommendation other than QuickBooks for nonprofits for grant accounting? Kyle, what systems have you used that you have liked?
Well, I would personally recommend QuickBooks Online because it just seems to be the most user-friendly and the most accessible. And it's cloud-based, right? So that's nice. You don't have to have a specific computer to work on your accounting. You can hire an outside firm that doesn't even need to be located in your city, right? They can be across the country, but they can still do your bookkeeping because you have a cloud-based system. I mean, there's also like Zero, there's Applos, which is another one. There's Financial Edge. I mean, there's tons of them out there, and all of them kind of do a lot of the same stuff. But it just kind of depends on what your price point is, right? And if you want an enterprise level software or just maybe a starter software, it depends on how big your organization is. And also it's important considering, the experience and knowledge of your bookkeeping or finance staff, right? If they're not familiar with the software, of enterprise level software, then maybe that it's going to be a little bit more difficult for them to get a handle on it and do your bookkeeping on a regular basis, uh, than maybe with a more introductory type software. So QuickBooks is generally, it seems to me to be a very intuitive software, and it's fairly user friendly. There are some quirks, right? There are some bits and pieces of it that people don't like, but I think on the whole that's a pretty solid option if you're just starting out, especially.
Yeah. And just a quick note too that a lot of groups may use QuickBooks Desktop already, and QuickBooks is essentially phasing that out. And so they won't be making updates to that moving forward. And so it's worthwhile to consider switching to QuickBooks Online, because that, again, like Kyle said, has the benefit of it doesn't have to be on a specific computer. It's cloud-based. And then I see someone saying a system called Wave is free. A quick tip for nonprofits, if you do want to go with QuickBooks, again, we're not endorsing one platform necessarily over another, and we're not affiliated with QuickBooks at all, but there is a website called TechSoup, and you can purchase QuickBooks Online through TechSoup, and it gives it to you at a greatly discounted cost. I think it's like, do you know the cost offhand, Kyle? It's very inexpensive.
I think for a year subscription, they give you a license for $80, for QuickBooks Online Plus, which is hugely discounted. Yeah.
Yeah. Right. What is the best, what is the best practice for time tracking for staff that are working on projects for multiple grants, and how to build that out to multiple grants efficiently? So, Kyle mentioned that, you have to track your time for federal grants. They will want to know actual time rather than estimated time. So it has to be, real time tracked hours, usually to the quarter of an hour is sufficient. There are a lot of systems that allow you to break it down by, so you could have like a code for the hours that are entered. So there's a system called T-Sheets. There's a lot of different time tracking options. You could also just use an Excel spreadsheet. But just having a column with some type of code for the specific grant that those hours are being billed to, will go a long way. Kyle, do you have any other tips specific to how to bill that out to multiple grants efficiently?
Well, it's a kind of this perennial issue that nonprofits have. It's always going to be a little bit difficult and granular. Um, and I guess like my best piece of advice for that would be to make sure that the infrastructure is in place before staff start having to track time, so that you're not looking back at old timesheets and trying to break it out and kind of guesstimate how much you spent on this federal grant activity, a month ago, right? It's so much easier to do it as you go. And so, encouraging staff to track their time proactively is a great tip, I think, versus having to do it after the fact and struggling to come up with legitimate time that you've committed to this federally funded activity, rather. Yeah.
Yeah. A few people in the chat are also saying they use something called Toggle. So it would be worth checking out. There are, of course, endless options for a lot of these things. So just checking out a few, maybe looking at if there's a quick demonstration on their website, just to see if it'll work for your needs is a good practice. has anyone any experience with FreshBooks for account management? I don't think I've used that system. Kyle, have you heard much about that system?
Not much. I don't know what its functionality is compared to some of these, I guess, more advanced platforms. But I mean, it really is just if it meets, your requirements, right? And if it satisfies the requirements for a federal or for a financial management system, like if you can track income and expenses, you can run budget to actuals, you can attach documentation if need be, right? You can enter journal entries. If you can do all of that, then it's probably adequate, right? So long as you have the supporting documentation to back it all up. You just don't want to get into a situation where you have a grossly inadequate accounting software and you've accepted a federal award, and now you have to try to do the accounting with very limited tools versus, having a more capable enterprise level, let's say, software at your disposal.
Calling out another time tracking called Tick Tick for people to check out too. And next question, can you speak to accounting for portions of a salaried employee's time toward a specific grant?
Yeah, so I do this a lot. Basically, what you're going to want to do is you're going to need to determine for a specific pay period how much time that employee devoted to a specific grant, right? So let's say they devoted 50% of their time to the grant. Well, now what we need to do in our accounting software is we need to break down their salary, their benefits, any employer related taxes. These need to be broken down according to that apportionment, right? So 50% of their salary will not go to any particular grant, but half will. And so we're going to break down line by line, basically, for salaries, for employer taxes, for fringe benefits. All of those need to be assigned that grant designation within your accounting software. And that should be substantiated by your by the timesheets, right? So we need to show, yes, this individual did in fact spend 50% of their time for this pay period, and this is how we allocated their salary and benefits. I hope that's clear.
Looks like we've gotten through all the questions. Does anyone else have any other questions? All right. I think we can end the Q&A portion just a couple minutes early then, since we got through everything. Oh, another question popped up. What do you do if your grant does not allow fringe?
I mean, put simply, you don't allocate fringe benefit expenses to that grant in your accounting software, right? So maybe just the gross salary, right? Maybe only a portion of that can be allocated. And if it's not funding fringe, well then we leave the rest of the employee's benefits and whatnot unallocated, right? So not there's no grant designation assigned to those line items.
Yeah, and I think that's part of the initial review of an opportunity and making sure that you are equipped and ready to take that on. So knowing that if it doesn't, if there's not indirect allowed, or if there's a cap on indirect that is lower than what you normally use, or fringe isn't allowed, understanding that you'll need to make that up somewhere else. And then another follow-up question to that. So the software won't auto-populate the fringe percent.
Okay, so generally within your accounting software, let's just say you create a paycheck for an individual, right? It'll list out the salary costs and the taxes associated with it, the benefits maybe. So what we're doing is essentially we're creating a journal entry, or we're splitting up that paycheck within the accounting software to, and this is like a manual thing, right? Where we're going to manually be allocating individual line items to a specific grant. And so if fringe is not funded and we can only allocate a portion of salary, right? We're only going to have salary assigned to that grant. Fringe and taxes and all of that will not be assigned to that grant. It'll just be left as unallocated, or it'll be allocated to another grant if applicable.
So Kyle, just to clarify that, when you're entering the salary, you would have to enter the base salary manually and then the fringe manually as a separate expense. Is that right?
So it kind of depends. So if you're using a payroll software that syncs, let's say it syncs with your accounting software, what it'll do is it'll push over a manual entry or a manual paycheck into your accounting software, and it'll list out salaries X amount, health insurance this amount, and so on and so forth. And so what I'm doing as the bookkeeper is I'm going to go in and I'm going to break out these lines. I'm going to add additional lines or reclassify some of these lines to that specific grant. Or I'm not going to do that for, let's say, fringe. If fringe isn't allowed, I'm not going to assign that line, to the federal grant.
Yeah. So it sounds like it may auto-populate in your accounting software, but you just then would not allocate that unallowable cost to that specific grant. You would have to allocate that elsewhere. Great. All right, perfect. Any other questions? Great. I will pass it back to Emery then.
Great. Thanks so much. Let's see. We have a question also about providing a general expense tracking template. We don't have anything like that, but Kyle or Libby, do you have thoughts on a general expense tracking template?
So for tracking expenses, I mean, hopefully you're doing that in your accounting software, right? If you don't have an accounting software, first of all, it's recommended that you get one, even just like an introductory level subscription to some sort of a cloud-based accounting software. It's very important to have double entry bookkeeping system in place so that you can manage the federal award and generate legitimate financial reports that doesn't, that aren't coming from just a manual spreadsheet. Tracking expenses. So, I mean, you can kind of build it out how you want. But yeah, there's a lot that goes into that. So, it kind of just depends on what you're looking for, right? Are you trying to track match? Are you trying to track by functional expense allocations? Are you trying to track by grant? All of the above, right? So it can get very complicated. You can have multiple tabs that flow into this master tab, or right. So it kind of just depends on how granular you want to get and what your tracking needs are going to be. So it's going to vary for every organization and for every federal grant too.
Great, and thanks, Lori. Also specified that she had downloaded the Excel match tracker and was wondering if there was something similar. And Susan, my colleague who helped design that match tracker tracking spreadsheet, just noted in our internal chat that the match tracking spreadsheet that we shared in the chat box is also a dual purpose expense tracker for folks who are just kind of using Excel and would like to check that out. So thanks so much, Kyle, and for those suggestions. Having dueling conversations in the chat and the Q&A right now, so trying to track both of those. I think we are going to wrap things up then. Thanks so much, everyone, for attending. Could we get the slides back up one more time? Thank you. Okay, so next slide. Just as a final reminder, back one, to the session schedule? Yeah, thanks. We have our next two sessions coming up on February 6th and February 20th. Kyle and Libby will be back with more awesome knowledge and insight. So hope you can tune into that. Again, it's the exact same link that we've been using for all of these sessions. And we'll be sending out, again, recordings and slides after this session. We also have a feedback survey that will pop up on your screen right afterwards. So we would love if you could fill that out, and we definitely reference and use that for design of future sessions. And last slide, just wanted to remind folks of how to connect with FactNet and the Community Navigators Initiative and all the resources we have there. Thank you so very much for attending, and we'll hopefully see you at future sessions. And thanks, Kyle and Libby, for awesome presentations.